Hey, so again, my name is Kristen Bradley. I'm with A&K Mortgage. I'm actually a president and mortgage broker. I am a 20-year degree, experienced financial planner, advisor, accountant, all that good stuff there. Anything got to do with a number. A&K Mortgage is my company. I am the broker, owner, president of it. Right now, I have about 4 other loan processors that work underneath me. I have a second company, A&K Financial Services. Been in business for the last 15 years. So that's anything to do with business setups, formations, income taxes. This is where my company is a double threat when we're working on mortgages. So again, anybody that's self-employed, I'm normally the go-to person when they are looking for financial statements. So that's kind of my overview. I've been in the mortgage industry. So for A&K Mortgage, formed last year, so we're officially at our 1-year mark. In the mortgage industry since 2017 and been killing it all the way through. So hey, I'm having fun. Can be stressful, but I love it. So today we're going to kind of go over, do a little bit more in-depth discussion on FHA loan requirements, and this is going to be focused on income requirements. Get a lot of people, and especially when you're trying to get your borrowers pre-qualified or trying to find out, because a lot of them have real estate agents. So ask me, well, hey, they make this kind of money, they work part-time, and they have two jobs, or they haven't been on a job long. So this is kind of what I'm going to this on this today. Okay, perfect. So income requirements. FHA requires effective income to qualify for a mortgage. So effective income, it means that the income must be reasonably likely to continue through at least the first 3 years of the mortgage and meets the state requirements. So that's where we run into an issue, especially with people who do contract work. It's real big for, I had a gentleman who was doing government contracts. They'll nurse it and travel nurses. They'll work 2-3 months and make $200,000 and decide not to work. They have options to go out there. But when you're looking at it from a mortgage loan origination standpoint, it's all about the risk involved in a mortgage. People have the money available. Same thing with people who have cash, a lot of assets available. That's good and all, but it's more than just that one piece of it. When FHA is looking over the loan, they're looking at the total risk factor. So it's not just those one or two components, okay? So employment related income, basically is income received as an employee of a business reported on an IRS form W-2 over a 2-year period. So that is the key part about when you initially getting documentation from your borrowers, or your potential borrowers are trying to get them pre-approved. You want them to have the most 2 recent years W-2. So for right now, we're in 2021. If they're doing a loan application 2021, you need 19 and 20. Those are the W-2s and the income period for qualifying that we'll be looking at. Again, and it does involve you have different types of income that's from an employer that are considered. So your primary employment, like I say, it can be full-time or salary, full-time or hourly or salary, working full-time 40 hours a week. We have part-time employment. It's uninterrupted employment over 2 years that can be used to qualify. People who can get overtime bonuses and tips, as long as they have an average over the 2 previous years, or if they've been on that part-time job less than 2 years, it's the average over the previous year. Seasonal employment, people you'll have, they do seasonal work at UPS or something like that over the holidays. What do they do? UPS when they doing the express, Black Friday type shopping, things like that. As long as they work in that industry and done that type of work the last 2 years, you can count that income. Key part about that, a lot of people call in and ask about trying to use their unemployment for income. Only people allowed to do that are people who work seasonal. Those are the only people allowed to use unemployment income. Anybody else, especially during the pandemic, I've had so many people reach out, well, hey, I was getting my unemployment. Unemployment doesn't work unless it was seasonal. They're seasonal employees.
It's a furlough.
Yeah. Furlough, it depends because right now, and this guidance is worse over the last quarter of Q1 of 2021. As of right now, it kind of depends. All the lenders put in these COVID overlays. Furloughs, most of the time, as long as they have a letter in hand coming back stating that their employment is going to resume, they still can't use that unemployment income, but they can start counting their income exactly 30 days after they've been back in their position. Another form of employment income is a family-owned business. So, hey, find that your aunt or uncle who owns a business and you work for them hourly or salary, you can definitely count that income with no issue. Only thing is, you cannot be an owner of that business. You cannot have a stake in it because that's where it switches over to being self-employed, especially if you're over 25%. But we'll get into that piece in the next section here. And commission income, you can still use commission income as long as it's earned at least for a year in the same or similar line of work. And again, it has to be reasonably likely to continue. And again, that's that 3 year in the future.
So as a realtor, I can still do FHA because as realtors we're always apprehensive about it because it's like, oh, I ain't got no W-2. But as a realtor, that's not something you should worry about because I guess y'all look at tax returns.
You can look at tax returns, so it depends on how the realtor is set up. So if you're under, and that will go to truly on the business or what their setup is. So if they're under an LLC, because a single person LLC, it'll still have to go under their personal income and they can look at the tax return. But again, it kind of depends. It's really just about the business structure, but it depends on what type of loan product you're trying to use as well. Because you'll have some FHAs that'll go strictly W-2, but then there are some that we can use tax returns to be able to qualify with. So it'll just depend on the individual situation. Yeah. Okay, so next piece of it is stability of employment for income. A lot of people run into this where I have people who they work jobs, they work different jobs, but they job hop a lot. I'm okay with that as long as it's consistent. As long as we can paint a picture as to why they're moving or why they're changing jobs or why they had to change, something that's always going to be acceptable. If they are going in and they took a job that was kind of higher paying, yes. But if it's just something you're making all these lateral moves and you just hey, like where's your stability in there? We can't even depend on you to stay with a job long, so why should we give you a mortgage? That's kind of what it falls.
Does it have to stay in the same field of work?
Honestly, if you are, that would be the only way around it. You really should want to work in the same industry if that's the norm in your industry. So a lot of times servers, as long as if they're going from different restaurants, that's fine. You know what I mean?
Yeah, the automotive industry.
Yes, if they're going from a different dealership.
It's a revolving door.
Yes. So like I say, if he's within the same, not an issue at all. So yeah, that's a good one. That's a real good one. Employment gas. Like goodness.
Well, I mean, yeah, it's like if they're high gun, they will. It's a revolving door period. Right?
Yes.
The serviceman insurance. They switch them from different dealerships. Sometimes depending on different owners, different cities. I live in New York right now.
Okay.
Logistics. So. Yeah.
Yeah. So yeah, because it's one of those. I'm trying to remember what they call them in economics. What are they? They're not are they oligopolies? Where they're high volume, but their niche is small. So you'll have a lot of. I think it's oligopoly. I think that's what it is. It's not a monopoly. It is one company, but it's multiple in there.
It's just a few.
Yeah, there's just a few of them. So yes, you'll have that change within there. So that like again, something that makes sense. And again, underwriters, they get a real bad rep, but they're people too, and it does. It's all about what makes sense. Yeah. Again, employment gaps. Any employment gaps, most of the time, I would say FHA specifically. As long as you don't have a gap more than 6 months, ideally 3 months, I'll say that where we don't have to have a lot of explanation within there. But if it's anything over 6 months, unfortunately with FHA, your waiting period has to start back over. Because I had a lot of people even that were out for COVID. Hey, they ended up out for about 4 months. No issue. We didn't have to wait for them to start over their 2 year period of job history for that. But anybody over 6 months, you got to start their waiting period. So hey, anybody out there who's getting those pandemic benefits or whatever, let your borrowers know. Hey, if you've been out for a while and you really want to buy a house, you may want to get back on out there in the workforce. Yeah, because there's a lot of people out there you know, that bring into that situation.
The restaurants, a lot of them are not able to, you know, build a function like, not a restaurant, they were open 7 days a week.
Yeah.
Or at least 5 days a week. Well, because a lot of people don't want to work or don't have to work.
Yeah.
Or they don't have to work. Only a lot of restaurants that are high volume, like Acme Oyster House, they only allow us to open like maybe 3 days a week. These are high volume restaurants,
yeah.
but they're not able to
Because they don't have the
operate
yeah,
because they're not able to
staff.
hold the capacity that they're moving
Yeah.
on the days that they're open.
And that's a lot of businesses falling into
running out
that.
of food,
Yeah, running out
supplies, waiting on the trucks to come in because a lot of people just don't have to work because of the benefits.
But then the same thing, all of that, and again, I gotta remember I'm a business major. A lot of that you have to look at supply and demand all the way around. Like I say, you got truckers in the industry, their rates are absolutely ridiculous. Because I do work with a whole lot of truck drivers. So I run into them, I do their bookkeeping, and it's a trickle down effect everywhere. So a lot of people get upset, well, why are these, you know, what are these, why we have all these stipulations now trying to get mortgages? But it is, the economy is everything is adjusted to the economy. Temporary reduction in income, same thing when people were losing hours. They were getting 40 hours a week, having to drop down to 32, 20 something hours again. COVID, luckily, has been an exception for most people, but anyone who experienced, people who have had that as an experience, as long as they're back on the job 30 days and they're back up to making their regular hourly wage, we can use that income to qualify. And again, it's all about the all required documentation. You gotta make sure that you're on point and able to justify whatever you're saying or claiming for those reductions or any kind of changes in the report. Self-employment income.
I get my life.
Yeah, that's my name. That's why I get more people about that. What can I do? So again, self-employment. We are looking at income generated by a business that the borrower has 25% or greater ownership interest.
So if a borrower has less than 25% interest in the business, they could still go like they wouldn't be considered self-employed.
Correct.
Okay.
Yeah, they wouldn't be considered
So
self-employed.
what would they be considered?
So it kind of just depends on what they're putting on their tax return. And if they want to claim that it's as effective income for qualifying for a mortgage. And if that's the case, they'll still have to report that. It kind of just depends, but realistically, ideally, I would still report it because at the end of the day, because I have so many people do that. Hey, I have a side business where I've been doing this, and I make the money. It's in my bank account, but that's not how you're getting qualified. You're getting qualified you have to get qualified on what's documented. Best way, easiest way, and a lot of people don't know to do it on their tax return, and I will say this because I'm a tax professional. I love you all. Everybody, no one wants to pay Uncle Sam. But if you are trying to qualify off of that extra income, you have to report it. You have to report it and pay taxes on it. It's nobody gets around it.
Pay that man.
Pay that man. Look now, that's how we all forget. That's how the world keeps running. So again, types of businesses are going to be sole proprietorships. Again, that's where depending on whether or not they have, if it's depending on setup. So it's sole proprietor. A lot of people consider it, or I hear most people say a DBA. That everything is meaning that everything is being reported under your social security number. There's no EIN number. Corporations, typically those are going to be your C corporations that are technically a standalone entity. So you have a separate tax report, separate tax return. By the eyes of the law, it is a whole individual person. Okay. Limited liabilities or S corporations. Again, those actually fall underneath. But they'll fall under not necessarily under sole proprietorship, but that's where you're reported under your individual tax return because so for the LLC and the S corp is a pass-through entity. So it'll flow through on their Schedule C. So that's what the lender is looking for. And you do not want that income to be on that Schedule C to be a negative. Negative means you didn't make nothing. And at the end of the day, it reduces your income. So I have more people, I got a business, I have a business. I look at the tax return, it's a negative on there. Yeah, you have a business, but you're functioning at a loss. You didn't make any money, so I can't count the income. Yep.
Does that take away from you?
Yes, it does. So that's where, I'm gonna camera. I don't want to say that.
I don't say it then.
Yes.
We'll say that off
offline. Yeah. Like I said, that'd be just one of those. Remind me. And partnerships, other type of business. So partnerships, those actually require a separate tax return. People report those on a 1065. Again, it's a pass-through entity as well. The partnership does fill out a tax return, but the income, the net of that income, flows through on your personal tax return. So if you're self-employed, doesn't matter what kind of business, what the structure is, if you want to claim that, it has to be reported on your 1040 with a Schedule C attached. Self-employment, minimum length of time. Again, you cannot stress it enough. 2 years to be counted as effective income.
Now this is for FHA.
Yes.
All right, so, so conventional may have different criteria.
Yes, most of the time they do. It kind of just depends, that'll probably be our next topic going around. Yeah. But yeah, for the most part, conventional, the FHA is going to be there 2 years effective income. Being self-employed, and again, it also goes to whether or not when you start running public record information on there. Sometimes in the year it was between 1 and 2 years. If they were working the previously employed in that same line of work or related for 2 years, you can count it. Okay. Other piece of that is when they're running public record, and a lot of people don't realize that. So if you register with the state or have your LLC registered with the state, and it's been in business on record 5 years, yes, that company may be able to work in their capacity, but to be able to count that income, you definitely would want to have that, have that in there. Mm-hmm.
So would they be one to look at, say you are public record for say 5 years, but then maybe over the last year you start making money? At what point would the underwriter start looking at that?
It depends. So FHA is based on the automated underwriting system. So people talk about ASU findings or DU findings, where most of the time FHA we're looking for an approved eligible, and that is initial when we're doing. Before I issue out a pre-approval letter, I'm going to run it through FHA to see if they'll even pick it up. Most of the times, depending on, because it pulls it off your social security number and your credit report that was given with the hard inquiry. Mm-hmm. So it's the way that it's set up within the system. It'll pull public records in the background, mm-hmm. and some businesses it'll condition you for 2 years, and some it'll only condition for 1. But again, it's going off of the risk involved in what your overall. So it
depends on what the digital underwriter can do.
Yep. Self-employment, income, stability of income. Again, you need annual earnings that are stable or increasing. Now, there's a case that is 20% or greater decline in the income. Just be able to document or explain any extenuating circumstances as to why the income reduced. And then. Yes, quite a few of those, because we had a lot of people 2018, 2019, income was great. I mean, after that, like it drastically declined because prior to COVID, you'd be looking for somewhere where, hey, they lost market share or they lost a contract, then you have to be able to explain, that's where you need your financial planner or your financial, advisor in there to be able to help explain within your financial statements how you've rectified that, or for anything that was in your control or outside. Required documentation for self-employed. Again, for the most part, for all of them, you're gonna need either individual or business tax returns or your IRS tax transfer. Most of your borrowers in their initial loan application, well, not necessarily loan application, but when they get an LE or initial disclosures, they'll get a 4506T, which is a request for us to be able to pull their tax transfer. Also, you'll need a profit and loss statement or balance sheet basically just financial statements. Most companies, because in the US, most companies that don't gross over $1 million, they technically are going to be on a cash basis. So most of those really only need a profit and loss statement. They don't necessarily need a balance sheet. Again, if you ever need those, ENK Financial Services, we are available too. Yes. And then business credit reports, and that is going to be specifically for corporations or S corporations. because they are technically considered a standalone entity and they do file a separate tax return. They file an 1120 or 1128. So calculate your effective income as a sole proprietor. You're looking at the gross self-employment earned over the previous 2 years by using the lesser of the average gross self-employment income earned over the previous 2 years or the average earned over the previous year. So again, that goes back to if they've been in business less than a year, but they've had prior experience working somewhere W-2, you can use that average over the last year. But again, average gross self-employment for other, again, 2-year mark on all of it.
Yeah. So do you?
Oh, no, good.
No. I answered my own question before I did it. I was going to ask you, so do you have limits that look at bank statements? And then I remembered, we just looking at FHA, so.
Yep. Yes, so we do. Yeah, we do. Rental income. So I have a lot of people ask about that. So just basic definition of what the expectation is for to be able to use rental income. So it reduces your effective income associated with the calculations of rental income by 25%, or you must verify 6 months of PTI reserves that's applicable only to forward only, or verify the borrower has received the previous 2 months rental payments by bank deposit that's only applicable when you already had a history of rental income from their property.
So now, does it have to be a level of equity in the house?
It depends. It'll depend. It'll depend if you're trying to take money on that house. So
if I'm just trying to, for me to use the income from that rental property, I don't have to have a certain amount of equity. Okay.
So rental income received from the subject property. So it's the property that you are so this is what just that I see if this will help. So the property, it has to be a 2 to 4 dwelling or an acceptable 1 to 4 year investment property. If it has limited or no rental history, you have to provide the proposed income by obtaining an appraisal. So they kind of go where you're looking at the equity
trying to buy it.
Yes.
No, I was asking.
No, if you're trying to use the income from that rental property
to buy something else.
Yeah. So again, if you have never rented the house before, you need to get an appraisal. You need to have a proposal together showing what their projected income is. That appraisal has to show the fair market value and any prospective leases if you have it.
So I can use income from a vacant property.
Yeah. If you're taking it at 75% of the value of the home, yes.
Really?
Yes. 75% you can take it. I'm not gonna say, but you have to have it appraised, and you have to have prospective leases in there. Do you plan on renting? Do you truly plan on renting?
So you gotta
determine how much they give you.
Yes, that you can consider as income from.
But you have to have a lease.
Yeah.
They just haven't moved.
Yeah. Yeah. So there's it's not technical, but if you're moving in the direction for it to be occupied. But that's just a projection. That's what I'm saying.
Do you have to have the lease in place, or can you? How do you? It does have to be in place.
Yeah, we still.
Because she was like, well, not technically, but technically. So I need to know because I'm actually kind of in this position right now.
It needs to be in place.
On paperwork?
The execute it, and you need some money, and yes. Okay. Again, those are ones that have not previously been rented. Okay, for one
they have not been previously rented.
Never.
Okay, so if you have, but you just haven't in a while, like maybe. I got a unit I haven't rented out maybe like a year or two, you know? So like it has been rented out previously before for like maybe
to the next
20.
History of rental income. 2 years rental history. The renter's history, renter history on their property. So even if you had some just spaces in there where nobody's been in there, still got to document it and explain it.
They're gonna look at a 2-year window.
Yes. And again, that's because it has previously rented. So you just said it, that it was already used to, you hadn't had anybody in there. But you still, that one, you had it, they're going to be looking at your rental income for 2 years. So how long is the rate?
See, it's a 2 unit duplex. The front of it is still rented, but the back, they out.
Okay.
So, yeah.
You can use the front end. The front right now, you can project. Honestly, it kind of just depends. So the second one has been rented before. Previous. It falls under history of rental income. So provide the existing lease, 2-year history of who's been, time periods and months that somebody has been in there, and it has to be on your tax return under a Schedule E. It has to be, yeah. So that's how you're reporting the income from it.
Has the front unit been rented in the past 2 years?
So it's rented out.
It's still now.
Yeah,
So
you can
that's
use that piece of, yeah, you can use that income from that one, yeah.
Because the duplex will be considered one property.
It is one. Well, yeah, it
Technically,
is.
like I
It
said,
has 2 addresses on it, but yeah, it is.
Yeah.
It's crazy how they have it. It's like I have 2 numbers on my units, and then for the whole unit, there's 1 number.
Got
This
you.
is even I even have this on my property.
You know what I'm
Mine
saying?
is- yeah, I have 2 numbers on my property, but then there's 1 number that's actually like for my property
Your
tax.
taxes. Mhm.
You know what I'm saying?
Yeah, so that's where it falls into whether or not it's a single family or multiple unit type situation. So I was gonna tell you something else regarding it. So the thing about that one is there will be I'll say this, since that first unit has already been rented, you can use that to use the income from that one, but you can still put it in and present that, hey, if this other unit was being rented, I would assume you getting more money with 2 of them being rented, right?
Absolutely.
You just can use right now, and if you depends on if you want to put up the fight, go ahead and get somebody in there for you to be able to qualify off of the higher income, have that lease in place. But you can easily use the income from the other one right now. It just be a reduced dollar amount. And again, the net subject rental income must be added to the borrower's gross income. Total mortgage payment cannot be reduced by the net of the subject rental property. So, yeah, people try everything. Like, hey, I got it on there, but I got that. You can take that out of my mortgage. Yeah, no, it don't work.
We're just
like
gonna
that.
pass
It's
through
stupid.
that.
No, like that's nice and all here, but you can't reduce your mortgage payment because of this. Because again, it is not a set. It's an agreement, but it just still depends on how long you got it. So rental income from other real estate holdings. So this one particularly will fall into somebody who has already owns their home, either getting ready to move into another home and they want to rent out their property that they own. That's basically what this means. So if the property is being vacated by the borrower, it must be relocated more than 100 miles away from the borrower's primary residence. I know. Yes. So for you to count it as straight income, rental income, unfortunately, that's one of those COVID overlays. 3 years ago, wasn't the case. So right now, hopefully as the economy picks back up, it probably will go that way because they don't want to put you in a situation that we're giving you, extending you, and you're over with more credit than you need, that you're too top heavy, that you have this old mortgage and a new mortgage, and why are you doing it? Because they're trying to, honestly, Fannie and Freddie have kind of put in these real tricky little things where they want more pieces of the pie on the mortgage side of it. So they have cracked down on second and investment properties. Mm-hmm. That's happened in the last 3 months. So that's where I've had a lot of people reach out asking about investment properties, second home. That's what this overlay is. Kind of unfortunate it's an overlay, but that's what's in place right now. And also, it must obtain a lease agreement of at least 1 year's duration after the mortgage is closed and evidence of the payment of the security deposit of the first month's rent. So when the day that you close on there, you've been able to get qualified to buy this second, you buy another or new primary residence, you have to have a lease in place and you have to have first month rent or security deposit.
That's the day of?
Yes, day of. You have to have that in the bank. Mm-hmm. And you're not looking on, I project it'll be, no, it needs to be rented in at least a year.
In the 100 miles.
Yeah.
Oh, that's after a 12-month period.
Yeah, no, the lease has to have at least a year.
Oh, a year.
It has to be a year lease and you had a first month security deposit. By the time you close, yeah. And then borders of the subject property. So that's a lot of people rent rooms. I have a roommate. On the way to be able to count that as income, that's income that you have, Basically, if they living in another room or whatever, you need to have a lease in place with them. Like, hey, everybody, oh, such and such living and they paying part of my money. And yeah, do you have a lease and are you reporting it on your tax return? Pretty much sums that up.
Gotta pay the man.
Gotta pay it. You gotta report it. Like,
you gonna talk about Airbnbs?
Nah,
that was my question.
That's what popped up in
So,
my head.
How is that working these days?
to actually buy it, as
People using it as
income. Again, it'll probably fall into that two-year time period on there. And again, it kind of depends. So the ones doing Airbnb where they doing temporary stuff, if you get in with a management company type thing, that could probably work more. Where you have a property management company doing it and they're on a lease with you and they have to maintain it. Yeah, but just I do it rented here and there. Other piece of that is technically, you can, because as long as you report it as Schedule E, it has to be on your Schedule E. It's not a Schedule C. That's what that is rental income or supplementary income on the tax return. So that's not that you're doing it for profit business. That's you are showing that revenue from that business, from renting that property that you own. So yes, that's the easiest and the best way on your Airbnb.
You want to do it.
Mm-hmm. Other sources of income, these are other types. Like I say, I have more people ask me about it. Well, can I use this? So pretty much real similar ones that most of us see in the time is gonna be disability benefits, alimony, child support, any monthly maintenance. Monthly maintenance meaning that either ex-spouse or but it has to be a legal document in place. So I have a lot of people who are separated. As long as you have some kind of order in place that's signed by the courts, yes, you can use that. Military income, mortgage credit certifications. That you'll hear a lot of lenders talk about that, where it's that credit to buying a home that you're able to deduct on your taxes, and it'll actually increase what you're able to use as income, because it's a tax credit that you're reducing what you have to pay in taxes, and it increases what effective income that you have. We also have Section 8 home ownership vouchers. I haven't seen many people use those. You have an automobile allowance. So if you have somebody who works for a company, they give them they pay them mileage or whatever, you can use that. Mm-hmm.
And people can buy.
They're using the company car.
They're like reimbursing them. So they're giving them their money back on their and that'll be specific.
No, you mean?
Kind of depends. You're looking for not gas mileage. You're looking for a vehicle allowance. So most of the time on your W-2, if a company is issuing, it'll be in one of those other boxes at the bottom portion of the W-2. So
is it for the company car or is it for the note?
It depends. It depends, because it depends on whose name it's in. So they're giving you so most of the time income like that, let me see. On the W-2, it'll be broken out. So bonus income, bonuses, or anything like that. They're looking at it from the perspective of the W-2. If that allowance, they're giving you that money. They're giving you that money back as extra income to say, hey, look, we have reimbursed you for whatever that expense was.
What about the incentive bonus? Because in the dealership, like, that is exactly what they do. They either give you the company card or either they give you the incentive bonuses. So how do they?
Probably if the incentive bonus is reported on their W-2, it gets tricky on that because of the Tax Cut Jobs Act in 2017. A lot of companies don't even do that anymore.
They don't. It goes directly on a car. Exactly. Yeah, that's what I'm
That's how they got out of it. So again, some people still do it, not all. Most times you're gonna see that it's somebody in the high executive level of the company. Yeah. Like if you look at a CFO, CEO, or something like that, that's where I see that. Somebody else, no, that was the whole point in them doing that. So a lot of people, and again, that's with tax knowledge, you don't get that anymore.
It's probably also hard to track it because it's an incentivized, because it's basically based on productivity and performance. So no, that's what I think.
Yeah, and what it is. Go into political.
Yeah, it's tricky. I already know. Yeah, that's why I was asking. Sorry, I'm asking the hard questions.
No,
so people are able to buy houses using the disability benefit?
Oh yeah. Social Security? Mm-hmm. Yeah. And actually,
some of those people, that's all they have.
If that's all they have, I guess.
They can use their income.
And yes, bro, still about 20, add another 25% to it. So yes.
That's a lot of people.
Yeah, Social Security is the Social Security and disability income. We can gross it up about 25%. Because especially if somebody gets Social Security disability, not necessarily SSI, unless the SSI is going to extend for the next 3 years. So a lot of people who have children who are getting it, as long as you got that 3-year piece in there, I can gross it up by 25%.
That's good information.
Yeah. So yes, if you have somebody that's on Social Security, send them my way. A lot of people don't know that because they do.
It's been in place for a while.
Yeah.
Because a lot of people, that's a great deal of their income.
Oh yeah, and I'm like I have quite a few. I actually got a loan for tomorrow. This is the primary, method of income. That and retirement income. Retirement income can't necessarily gross it up, but it is as long as it's showing that there's you invested in that is your income. Also, other source, another is investment income. Capital gains and losses. That's for anybody who actually actively trades in stocks and bonds. Expected income. It kind of depends though. Again, on the situation and what the structure is on it. So, like I say, it kind of falls into the. How do I want to say? If you have a contract in place or you have ARs and receivables, kind of all of it groups in together or whatever. But it's money that's, it's coming, you just haven't started receiving it yet. Yes, you can use that as long as it's documented. So again, trust income, annuities, notes receivable, non-taxable income. And
so capital gains?
Yes, if you actually reported it, you actually took those capital gains, yes. Yes. Like it's because you remember you have to source your income too, so where you get the large dollar amount. But yes, still, but most of the time you get that year-end statement, so you can. On stocks and bonds. So when you selling and trading on the stock market type stuff.
It's like profit.
Yeah.
You bought it low, you bought it at a price, you sold at that price, that spread in between your gain, capital gain, and tax.
Yep. And a lot of times people, for tax purposes, and that's where it kind of is weird. Like, hey, it's there. You can take against it if you ever needed to, depending on the dollar amount. Okay, so that's pretty much something about income. So hopefully that was helpful, useful. So when you have your borrowers, because I know they ask y'all ways, and then I have agents call me asking me. So hopefully this is helpful. Give them that piece.
Very helpful. All right, so y'all have any questions? I see we got Patrick on as well. And Patrick, if you have a question, either do it in the chat or just unmute yourself and ask it. Anybody have any questions? I think I asked all mine.
Hey, I have a question.
Go ahead. Go ahead, Pat. What'd you say?
Hey, can she break down for me everything that, like, say a buyer would have paid in the loan process, from them paying for their taxes, their mortgage, like everything that a part of every fee that they would probably pay? Can she give a breakdown of that?
I can barely hear.
I know.
So he's asking if you could do a breakdown of the fees. So you're talking about the fee for the mortgage?
Yes, the fees on the mortgage and closing costs, and also with taxes. Yes.
Yeah, it sounds like what you're asking is the breakdown of the mortgage closing costs.
Yes.
Okay, so mortgage closing costs. So let me just do this, and this is where it kind of gets. I have this one every single day. So closing costs for a mortgage, everybody, and this is why. Oh goodness.
Look.
Okay.
Say this a hard one, man. You just stumped up.
It's not a hard one, but it depends. Unfortunately, it's situational because basically closing costs are going to be, everybody got to get paid. You want it, realtor going to get paid. Your commission part comes as part of there. It's in there as part of APR. I'm just be honest with you. Everybody's part of it. It depends because it's still, if look at the closing disclosure on your next buyer, okay? But closing costs is really all it really is your prepaid expenses, which are going to be your homeowner's insurance, property taxes. Depending on the state, Texas requires property taxes to be prorated. Meaning, so we're in a month of what month? May. We're May? Okay, got a month borrower that's closing in the month of June. You have to have 6 months of taxes prorated for the year.
So that's
Prepaid. They have to be escrow, and it depends unless that person gets an escrow waiver.
Okay.
Where they don't have to escrow property taxes.
Okay.
That is right now with COVID, far and few that I'm getting escrow waivers on there. So if anybody that you're working with,
Well, this is for FHA.
this is I'm saying
It's for
it,
everybody?
Texas requires your property tax to be escrow.
Really?
Yes, not escrow, but it depends. Again,
If you
depends
get
on
an
since
escrow.
yes,
All right.
unless you get the escrow waiver. But they do require you to have taxes considered in that loan, unless there is none in there. So prepaids.
All right.
So
So,
your annual-
6 months of prepaid taxes. 6 months of prepaid insurance.
Yes. No. Most of the time, unless you pay it up front, then prepaid, you're gonna pay 12 months on a homeowner's insurance policy.
12 months.
Yes.
All right. So 6 months of prepaid taxes, a year of prepaid insurance.
Mm-hmm. Then you'll have the escrows,
All right.
where, and it depends on when you close on it. That's gonna be, the lender may require, most of them, they require 3 months. That's gonna be, and if it's saying they did only 3.5 down, you're gonna have mortgage insurance. So you're gonna make you escrow 3 months of that, 3 months of property taxes, and 3 months of insurance.
So what is the 6 months prepaid in?
That it
Of property
depends. It kind of
taxes.
it depends. They want you to pay up. That's for June through December. They want you to pay that in full because already up front. So the property taxes are already paid, and they're gonna send that directly to the county.
Okay.
Okay. Then the escrow piece of it,
It's to like give you a cushion.
yes.
Okay.
But again, it's all associated costs. I wish I could reach out to me separately, and I'll go and I'll go over a closing disclosure with you. I just need to
You need a closing
get a
disclosure.
redacted one, and I can walk you through one of them.
Okay.
Okay, cool. Yeah, I'll do that. Yeah, I'll do that.
Okay.
Okay, yeah, I'll walk you through. I literally.
Why
I
don't
can
you
walk
give them the
through
best way to reach out to you, like a phone number or, a matter of fact, I can put it in the chat.
one. Okay. Did I even? I don't even think I had it on the
Slide.
slide.
Who made
Best
it?
way to reach
It
me.
was me.
Yeah, it was Kyla. I'm gonna say put on
She
like
gave you that look too. boy.
I've been doing it like,
she has me.
She like, how do people gonna call?
I gotta get in touch
How
with
they gonna reach out to me? I done done all this good work. All right, what about? I'll type it right here in the chat.
Okay, but buyers, real estate agents, please call the toll-free number because that way somebody will answer the phone. 833, and it's actually a vanity
833?
number, 833-425-6678.
All right.
And it's extension 1, that's for A&K Mortgage. Extension 2 is A&K Financial Services.
It say
yeah.
it say all
It
that when they
says
call.
all that, it
Okay?
does, but
So
yeah.
call that number right
Yeah,
there.
dial that number.
All right. And then what
You can
about
also
email
text on
address?
that with email address. You can.
Well, hold on. So you can text that number.
Yeah.
All right, so you
me
can
on
text that number as well. All
Yeah.
right. And then email.
Email address is Kristen KRISTEN @akmortgage.net. And I pretty much check I'm normally sitting directly in front of my computer. So if you email me, that is the best way to get in touch with me, unless I'm doing stuff like this. Website, www.akmortgage.net. Give a little bit of information about the company, services that we offer. Link to the loan application is on there as well. Trying to remember if there's anything else, but if you do run into any questions or y'all have questions or just kind of want to run it by before if you have a scenario, please you call me or like best email me, and like I say, you get a pretty quick response.
Quick response.
Yeah.
All right. So Pat, reach out to her directly, and she can go through that dialogue, have that dialogue with you.
All right, gotcha.
Yeah,
Thank you.
A lot of times, and again, I know I didn't answer the full question, but for the most part, and it goes where, so we know when y'all go to selecting title companies drive a big chunk of it as well. That's why
I think he's
borrowers
specifically asking about the lenders, though.
Yeah, but that is part of the closing costs is the title fees.
So
lender
title fees
is
as
going
well.
to be MI. You have to pay
lender
if you're going to
fees.
lender
Mortgage
fees.
insurance.
Yeah, and it depends. Most of the time, mortgage insurance is going to be 1.1, depending on the lender. It can range between 1.75 or the loan amount.
Okay.
Okay. So if you're ever trying to get an idea of how much their MI is going to be on it, their MI is going to be. Other fees that's going in there, appraisal, settlement. But again, these are things that fall through there. But as far as my origination, I typically go lender paid on my loans.
Okay.
So that the buyer isn't having to pay anything up front for my brokerage piece of it.
Yeah.
I try and go with the lenders that are going to have the lowest origination fees. So when you're looking at those LEs or you have your buyers looking at them, pay attention to the section A of that loan estimate or that closing disclosure. That's where you're looking to see how much the lender is charging to process.
Okay.
It is where you get paid on the back
By the lender.
But then if they have to pay origination, that's maybe that lender's not paying you or whoever, and that borrower is paying up front.
Yes, but either way, most of the lenders are going to charge a fee. Right now, and it depends. During COVID, we did have some, depending on the loan product, that they were waiving their origination fees or they were discounting them. Right now, most of mine I'm seeing anywhere between $500 and $1,000 just origination fees, because you got to pay attention to how many people and how many hands are touching in the background.
Absolutely. Okay. So is that answered a little bit, Pat?
Yeah, that answered it. Yeah, that answered a little bit, because I want information on both sides, from the mortgage side and also from the title company. I just want to have a better idea, so when I'm having these clients ask me, at least I can make sure I'm educating them as well, so they can better understand.
Okay.
Absolutely. Honestly, whatever title company that you're using, so you'll have a really good idea on what that is, because most of the time my realtors, I ask them, hey, taxes on this home before you get there. Before we start writing the loan, take that, divide it by 12. You gotta pay 6 months depending on your close date. Take that, even at the end of the year, most of you only pay, if you're in November, close November, you gotta do 2 months. Do that. Easily get that from the title companies that they put on there for escrows. Call them and ask them for a list of their title fees. That way you'll have a base, especially for you to be way more knowledgeable with your borrowers. Just get that information for them so they'll already know what the title fee is.
Okay, cool. Thank you.
Right. Any other questions? Before we start eating, we got food. But do y'all have any questions? Any other questions from the people that's online with us? No? All right. Well, I thought that was great information, Kristen. Really appreciate it. Like I said, we're gonna break bread. Everybody that came on the inside, thank you once again. We'll probably do a mortgage segment at least once a quarter. Give great information, really help us stay abreast of what's going on from a mortgage standpoint.
Okay.
All right. So if you guys don't have any other questions, man, we'll let y'all go, and then we'll get our fellowship on. Y'all have a good one.
All right. Thanks again. All right.